Hi guys, what's going on? In this video, we're going to talk about undeniable facts of truth, which is the market will absolutely drop 50% in the United States in the next 6 months. Now, it could happen much sooner, and the drop could be a lot more than 50%, but I'm going to describe to you in the best way I can exactly what's happening, and it is not anything what anybody is actually bringing up to your attention as a trader or an investor. So point number one, the undeniable fact number one. What is the definition of inflation? Well, there's a couple of ways to look at it. If you look at economic definition of inflation, it is the expansion of the money supply. And so with the market basically pricing in Federal Reserve cut in September, that would be monetary policy that increases money supply through a looser monetary policy by lowering rates. So that by itself is a move in favor of progression of the inflation. Now, think of it this way. In other terms, we can explain inflation where the cost of everything goes higher. And in this particular case, when we're talking about United States, USD is dropping like a rock, right? There's been a few instances in the United States history where dollar takes a major hit. And so when dollar index drops like DXY, USD, when it drops from, 110, 113, to a level of 100, it is something to pay attention to. Because if it drops from here, which right now USD is trading at the lowest point in the last 8 months, and if this condition of United States dollar keeps deteriorating, okay, and the reason it should and it will is because while the United States is lowering interest rates, some other countries are actually inflating them, such as Japan. And just think of it in terms of the dollars that you have now buy you less. All right. So if you're buying a house that's, in not so distant future, not so distant past was priced at $1 million, well, now it costs you $1.1 million to buy it. If the price of Coke was, $1, now it costs you $2.50. So basically it costs you whatever you're looking at, cost of produce, cost of going grocery shop, cost of everything. It costs you now more dollars to buy same shit. That's another definition of inflation. And by definition, when United States dollar drops against some other major currencies like Japanese yen, that is an inflation. All right. So when United States dollar drops against Japanese yen within days by 10%, that is a huge move. It is an abnormal move. It is a move that the market did not expect. And yet the markets bounced pretty crazily. But if you take a look at the USD JPY chart, which is the chart that basically shows you the relationship between United States dollar and Japanese yen, they're trading very close to the August 5th low within like a couple of points, while the rest of the market is trading basically close back to all-time highs within, just a very short distance from all-time highs. So the question is, which type of divergence is it? Well, it's a bare fucking divergence, because if you take a look what instigated the crash on August 5th, the Black Monday as we called it, the most recent Black Monday that is, it was two factors. Number one, it was devaluation of United States dollar. And in essence, what are we talking about? We're talking about inflation. And at the same time, that Friday was it August 2nd job report basically showed deterioration. So deterioration in the employment data was a concern for the market because, well, basically it's a fucking recession. Okay? And what makes it the worst sort of situation is you have deteriorating economic conditions that no longer can be hidden, that are now combined with monetary policy, which is inflationary, at the same time when some other countries in the world are tightening their policy, which puts extra pressure on the valuation of United States dollar. Not to mention the geopolitics and, half of the world's population trying to dump United States dollar, creating an extra headwind for United States dollar value to go lower. The less people are going to use it, the less money United States is going to be able to print. We're talking the undeniable facts of truth here. So what is going on then? During the Wyoming speech in Jackson Hole just a few days ago, Powell said the following, and on which, surprise, surprise, the market reaction was absolutely ridiculous. The message, as I interpret it here at 13 Market Moves, and as some other traders interpreted here at 13 Market Moves, is the following. Powell said that labor market is fucked. He basically voiced for the very first time that he's shifting his focus from inflation to the labor market, because you don't want to have a situation when unemployment is running completely out of control. And so his main focus now, and the shift in the policy of the Federal Reserve, is the labor market, because labor market is weakening. It's showing signs of weakening. And guys, if you've been following our channel, labor market, all the stats they're showing for the unemployment data, all the stats they're showing for unemployment claims, it's totally cooked. Okay, Democrats have cooked all the data, just like they fucking cooked the 2020 election. Okay, them motherfuckers are so good at cooking the numbers. It is another undeniable, set of facts and truth. Okay, but there is a moment to which, you arrive where you cannot hide the numbers. You can hide them when, the discrepancies are small, but you cannot hide them when the discrepancies become so huge. Like, there's nothing like in accounting where you can hide something that is absolutely a grand mega event. So when they're saying unemployment is like 4%, guys, it's total BS. The unemployment really probably in the United States right now is more like 9-10%. And we're fixing to go to probably 13-14% over the course next 90 days. Okay, you cannot deny the fact that each day goes by and there is more and more companies that are announcing layoffs. There is more and more people that are losing their jobs. That is a fact. That is an undeniable fact of truth. So now we got two undeniable facts of truth. Number one is United States dollars dropping, which is inflation. We have United States Federal Reserve Bank that is persuading a inflationary monetary policy because they're concerned about the deteriorating labor market. Okay, and that policy is inflationary. So the undeniable fact number one is inflation didn't go anywhere. And if you pay close attention to the Powell speech during the Jackson Hole presentation, you would have heard him clearly say, he's not saying that inflation is not a problem anymore. He's saying that now labor market is much greater problem than the inflation. Which takes us to a basic definition. When you have deteriorating labor market conditions and inflation is not in checkpoint, inflation is definitely on the rise. You have perfect economic conditions, which are quite rare, by the way, that are known stagflation. There's such thing as stagnation, where basically stagnation is just shit slowing down, the economy ain't growing. okay? And during stagnation, you have, there's no inflation. Inflation is not moving higher because everything is dropping off. But in rare occurrences and circumstances throughout economic history, you will have an event defined as stagflation. Basically, the job market is going through stagnation. It is not fucking moving, okay? And it's certainly not moving in the desirable direction. As I mentioned, they cannot hide the numbers. So not so long ago, if you rewind maybe a few months ago, 12 months ago, the unemployment rate was in the threes, okay? It's like 3.4, 3.5, 3.7, and it keeps going until now we're like over 4% on unemployment. And again, those are fake bullshit numbers. The reality is we're probably at 9, 10% unemployment. And it's exactly the condition that took place in 1973, 74, where basically it didn't look so bad. In 72, 73, you had unemployment rate like 3, 4%. Okay, then it started taking above 4, it got to 5, and before you knew it, it was at 10%. Now, check the most, I would say, hilarious moment of Powell a couple of months ago during one of the Fed meetings, where a journalist brought up a question about stagflation, and Powell basically laughed at it. In one of the next few videos, I'll find a video clip of it, because I thought it was so funny. I actually saved it. And in that video clip, Powell basically is laughing at the question, saying, hey, I don't see the stag and I don't see the deflation. Basically, he totally denies the idea of stagflation, and yet it is totally undeniable. The job market is falling the fuck off the cliff. And inflation is going higher because United States dollar is dropping every fucking day. So you have inflation and you have stagflation, which is stagflation. Okay, you have slowing economy and you have rising inflation because USD is dropping off the cliff. You put those two undeniable facts of truth together and you get stagflation. Which brings me to the next major point, is the fact that there's never been an instance in any economic history, not just United States, but anywhere in the world, we had an instance of stagflation and the market did not drop at least 40, 50%. Okay, now that is an undeniable fact. Number 3, you get stag and deflation, you get a fucking market crash. Now, somebody asked me a question. Well, what is the solution to it? Well, there's no solution. It's a checkmate. It is a checkmate for the Fed. Okay, nobody can fix the stagflation without two things happening. Okay, if you try to address the labor market by lowering the rates, you only increase the inflation. You basically get a push to the inflation higher. And so that's why in the late 70s, they started experimenting with raising rates. And it really got to a defining moment when Paul Volcker basically came as a Federal Reserve chairman. He said, you know what, we're going to jack up those fucking rates to where, I mean, you can't see straight. And that's how, to contain inflation in the 80s, United States had interest rate. I mean, people are complaining about 5, 6%, 7, 8%. I mean, in the 80s, you had situations where interest rates were like 16 to 18%. So, that is exactly how Paul Volcker fixed the inflation, is by jacking up the interest rates. And that led the country, United States of America, in 81, 82, one of the most brutal recession/depression type situations. Okay, so that was a cure one. Paul Volcker raised the interest rates to the fucking moon. Well, we know that's not happening, right? Because Federal Reserve already said during the Wyoming speech, what? Oh, we're ready to shift on the policy because inflation We don't see inflation as big of a problem anymore as we see the job market. By that, I think he finally fucking admitted that now he sees the stag and he sees the fucking inflation, which he didn't see just 60 days ago. And the market on that news does not collapse. That is the most profound observation of the last few trading days. The market is still yet to arrive at the conclusion that it is stagflation. All the market participants that are planning for soft landing beyond any reasonable doubt, okay, they're about to learn how to fucking spell stagflation. The mega crash is coming for the simple reason that if we analyze the stagflation conditions in 73, 74, which by the way had a lot of other similarities to the current times, such as the war in the Middle East. Surprise, surprise. Go study the history. 73, 74, Middle East war. What do we have going on now? I mean, guys, Middle East war now, this major conflict that started with a massacre on October 7th. I mean, we're almost there. It's almost going to be a year. I mean, do you think if they really wanted peace and peace was the ultimate goal, it would have already been achieved? But you can't negotiate peace within 8 months with hostages, innocent kids dying. I mean, that's the crazy fucking world we live in. I mean, it's not going to happen under the Dems' watch. Then Democrats are causing all this bullshit around the world. So, without deviating anymore from the main subject, is you got the stagnant inflation, and I think Powell is actually able to see it, and he knows it's a checkmate. And we know from studying history that, guys, the market cannot escape stagflation. And market participants are yet to realize that this is so far from the soft landing that everyone is picturing, because the real case that we're dealing with is 73, 74 stagflation, and the Fed cannot raise the rates because countries' debt, personal debt, credit card debt, okay, any kind of debt that you measure is at astounding levels never seen in the history of the fucking world. So the Fed is not at liberty of increasing rates here to contain inflation, as in the case of Paul Volcker. But if the Fed was to contemplate on doing that over the course of the next 12 months, I think the market is not going to crash 50%. I think it's going to crash 60, 70% from current levels. So when I was recording the last few videos, I said, look, guys, this is the greatest short selling opportunity since 1907. Okay, most of the people think of the two great crashes of all times in history is 1987 and 1929. Well, the truth is it was 1907. And I think we could be seeing a 1907 style crash, okay? Because I believe the situation is absolutely inevitable. It is absolutely inevitable that the market will collapse at least 40, 50% over the course of the next 6 months. And again, it could happen sooner. So those, again, are very rare economic conditions. And you should treat them as very rare economic conditions from your position of urgency in the way that you would put your trades together, in the way that you would proceed trading this, in the way that you would set up your account and the type of instruments that you could be trading. Some of the greatest trades, guys, this year have been oil trades, gold trades. But again, they're not gold and oil trades on gold or oil stocks. We're talking about trading options, not futures, but trading options on futures and gold, oil, natural gas, and so on. They already are, but they're gonna be undeniably the greatest trades of all times. Now, history tells us 1973, 1974, oil goes to the moon. Okay, I don't think that's going to be the case this time because, well, United States has prepared itself. I mean, it pumped out. In 1973, 74, United States wasn't pumping any oil. Now United States is the greatest oil producer in the world, right? So we're not going to have a situation as far as oil prices like 73, 74 just because of that. Oil supply is not an issue. The reason oil prices went up to the moon in 73, 74 was because there was a shortage of oil. The demand was high. There was no fucking oil because of the war. There was no oil coming to the United States from the Middle East. So that was the major part of why, people shifted from these big, heavy American-made cars to, tiny little Japanese cars. And, I mean, those were the times, right, where people couldn't go to a gas station because there was just not enough gas. There was no gas at the gas station. So you couldn't put enough gas in the big V8 motor that, most of the American cars had at the time. So, I mean, that's a lesson in history. With the exception that now some of the ingredients have changed and there's plenty of supply. We're going to a situation in the oil market where there's plenty of supply, very little demand. The demand is about to drop off like you've never seen in your lifetime. And so it's going to be wild. Look at the chart of oil in 2007, 2008. I think the same thing is going to be happening now. Now, as far as gold had a major boost in 73, 74. Gold was moving higher, but also is partly due to the fact that United States took the US dollar off the gold standard. And so similar conditions, right? 73, 74, what happens to United States dollar? It goes to shit. Dollar drops. Okay, when dollar drops, it is inflation. All right, that's what you're looking at. It is inflation at its best. So when the Federal Reserve says, whoa, inflation is, we got it. It's close enough to 2%. Okay, well, it's not. Number one, 2.99 is not close enough to 2%. It's definitely a lot closer to 3%. Number two, those are not even real numbers because the way they used to report inflation back in 1973, 1974, a lot of those components that were part of the inflation reading back then, they're no longer part of the inflation reading now. And the most common statement you will hear from the Federal Reserve now, and they're going to say, well, we got the inflation pretty much under control because, hey, look, if you take this component out of the inflation reading and you take this component out, and you take housing out of it, I mean, everything is fine. We got it. There's no inflation. Yeah. And so if you take enough components out of the inflation reading, I guess you can produce an inflation reading that looks low. And they've already taken a shitload of inflation components out of there, and they still cannot get to the damn 2% that they keep talking about now for years. And I'm telling you, there's no way inflation is going to fucking go to 2% unless the country goes for a severe style 81, 82 recession, depression top situation. And that's exactly what we're looking at. And the situation is not going to be pretty. There's so many market participants that are bullish on this soft lending top situation. They absolutely cannot see the stag and deflation hitting their trading accounts, hitting their investment accounts. I mean, majority of the world is not prepared for United States market to drop off 50 to 70% over the course of next, 6 to, let's say, 12 months. The market participants are not ready for it. The banks are not ready for it. And the greatest overvalued trade of all times right now, it's the small caps. I mean, any analyst on Wall Street that tell you, man, this is where the rotation is going. We're buying small caps. Small cap, these small cap companies are going to be going out of business. That doesn't make it the greatest trade on the bull side. That makes it the greatest trade on the short side. So, guys, be on the right side of the market. Use the right trading tools, okay? In the prior video, we talked about trading the actual underlying. Okay, so for example, how would you short the small caps? Well, you would short the futures on the Russell 2000 /RTY is the ticker for it. And you would trade options on Russell 2000 futures. If you don't know how to do that, guys, you will miss out on some of the most magnificent trades over the course of the next 6 to 12 months. More importantly, you will miss out on a trade that can definitely get your account above $1 million plus, even if your account now is at like 5, 10, 20K. But you've got to trade the right stuff. And if you don't know how to do it, guys, if you need some help with it, you come to 13 Market Moves. We'll guide you. Your coach will show you, okay, do this, click here, go through, set up your account correctly. Set yourself up for success trading these markets. There's going to be phenomenal money made on put options near term, next 30 days, next 120 days, okay? And most of the people are going to be buying puts after the market is going to drop. Your goal is to buy put options now ahead of the huge collapse. Your goal is to short this market now ahead of the situation where everyone is going to be talking about stagflation is going to be the new word for 2024, 2025. Okay? You're going to be listening to news media and they're going to be like, what is stagflation? They're going to be fucking explaining what that is. We have been explaining you what stagflation is since the beginning of 2024, since the last few months of 2023, all right? And now we're finally getting to a point where the market participants are going to finally reprice the market, not based off the soft landing outcome, but based off the stagflation outcome. And you're going to see all these bulls turn into bears. In a way, this is going to be the biggest shift, the greatest mispricing, repricing of stocks you have ever seen in the recent history. So proceed with ultimate urgency, guys. This is the time to trade. This is the time to put together 10, 20, 50, 100x. I guarantee you there's going to be a 200x trade. But it's not going to be there if you wait another 30 days, if you wait another 120 days when the market crash and the stagflation is going to be the primary subject of discussions everywhere you turn on TV or any newspaper or however you read or consume your media. It's going to be there. That is going to be the word for 2024 and 2025, stagflation. If you understand, there's never been an instance in the world where you had a case of stagflation and the market did not collapse. Well, now you know it, and it's time to act. Now, remember who brought you this information first. 13 Market Moves. Go to 13marketmoves.com, sign up to trade with a coach. 13mmtv.com. Schedule a call. Make sure you set up your account for success. Make sure you've got the right stuff that you are trading. Because again, you cannot go trade gold stocks, okay, because we think gold is going to move exponentially in a certain direction. You got to trade options on gold futures if you want to get the maximum payout on your options. And if you're not sure how to do that, guys, that's why we're here. Our mission is to take a bunch of guys to 2 million plus in the next 120 days. And I want you to be a part of them. If you have any questions, get in touch with us, but don't wait too long because the time to act is now. I hope this information was useful. Guys, we're going to be trading, so I may not be recording a bunch of videos or messages. You're probably going to see a bunch of success stories from our students hitting 500 million, fucking 10 million over the next 120 days. I just don't want you to be the guy that's sitting there thinking, oh my God, yeah, Leo said this mega crash is coming and this and that, and you didn't do nothing about it. I don't want you to be the guy looking back at this message saying, man, I wish I did something. Be the guy that fucking does something about it now. Let's fucking go. Let's roll.